Good evening, ladies and gentlemen. Welcome to this call. It is Monday evening. It's time for Crypto Talk. And I trust that whatever coins you hold, whatever coins, crypto you are looking to go and buy, and those that you have had interest into are the ones with the green candles. I can see that there are some cryptos that keep green candles while the others going red. And I know that we have a whole team to talk to you about that tonight. And tonight we want to talk about the last 6 years of 2022. We are in the last days of June, and there's 6 months for us to make money. And we thought we're going to make money the first 6 months by only doing trading crypto on the app side. And I know some of you have now learned how to do crypto trading on the downside as well. But we have 6 months, and we have to go look at the prospects for the next 6 months. We have to go make sure that our portfolios are in line for us to do the best we possibly can in the next 6 months. And therefore, it's important for us to go and look at our portfolios and to go and reassess where we're at. And I'm certainly doing it. And for me, it is true because I have to do that. I have to go look at the last 6 months of this year. I need to go and maximize the money that I have in crypto in this little while that's left of this year. But so for me, it is all about being proficient in going and seeing what's happening in crypto and making sure that I have a portfolio that will assist me to be able to do that. And without further ado, because we have limited time with him on the call tonight, let me introduce our subject matter expert on crypto trading at the Crypto School, none other than our own Jason Ashington. Jason, we really appreciate your contribution week in and week out. And we know that you have somewhere else to be. And thank you for making time for us tonight to just come position the market for us and leave us with your thoughts for the next 6 months before you sign off. Jason, please show us the markets, buddy.
Thanks, everybody. Yeah, it has been really a testing last 7 months in the cryptos from March 2020, the COVID drop, all the way up until, I would say, November, December last year. We had massive quantitative easing where the Fed was printing money and pushing the stock markets up. And we enjoyed that tailwind in the crypto space where we had a fantastic move in crypto from Bitcoin was at in March 2020 was, I think, 3,000 and some change. And in November last year, we went right up to 68,000. So there was a massive surge in the price of Bitcoin. And that was with the help of, with the Fed, with the quantitative easing and pumping money into the markets. But that unfortunately came to an end in the end of November last year. And we've had the opposite in the last 7 months with quantitative tightening, where they've taken money out of the stock markets. And that has also unfortunately caused massive inflation to come through. The likes of the war between Russia and Ukraine has also not helped the situation, pushing the oil price up. And it's been very tough mentally, I would say, and financially in the crypto space. But there are signs right now that we could possibly be turning, and I'm using the word possibly because it's still early days. And the one other thing that comes to mind while we're talking about it is that the USA has got their midterm elections later on in the year in November. And I think that the government in power will want to do their utmost to make sure that they get re-elected in those different areas where those elections be taking place. So they're going to do their utmost to make sure that the whole sentiment in the economy, in the markets, all going to change to positive. That is my personal view, and I'm sure the government will be thinking the same way. Let us just have a look currently what we see in the markets, and I'm going to start with our favorite called crypto bubbles. And we see one massive bubble in the middle called USTC, and that is now linked to the new Luna coin. And you can see what's happened in the last 24 hours. We've got up 90% in the week, 340%. I don't fully understand how it actually works, because you've got a pegging here of over 3 cents for a stable coin, which does not make sense to me right now, but I will come back to you next week, exactly how this works. Right now, it's not making sense to me. But nonetheless, let's just have a look at the other bubbles around here. We've seen some massive moves in the last week. And right from Stanford, that we know 40%, there was some news that came out around Stanford. Shiba Inu 34%. We've got Doge. Looks like these meme coins are starting to move 20%. Matic 32, Comp 45, and all that. But it's really a sea of green for a change compared to the last couple of weeks, where it's been a sea of red. So that is very nice to see. If we go and have a look at Bitcoin, the price right now is 20,600. And this time last week, we were also at 20,600. So Bitcoin's really gone sideways over the last week. And it seems to be trading in this range between 19,904 of the low range up to an upper range of 21,663. And we also got a mid range of about 20,671. You can see we're actually trying to drop below that. As I say, what's really pushed in the last week has been the altcoins as opposed to Bitcoin. But nonetheless, the indicators like the stochastic RSI is overbought on certain time frames. And I think we are going through a bit of correction there. But more importantly, the crypto market has been following the stock market for a couple of months now. And the leading indicator around that has been the S&P 500. And what we have seen is that in the last week, we've seen a massive surge in the stock market to the upside. A move of, let's just go to a higher. So the 20th was around here. So we've seen a massive move of about 6% in the stock market in the past week, which is massive for stock market terms. And that has really been because of the Fed pumping money into the market, because of what we've seen that happened with the 10-year yield 2 weeks ago, where the 10-year yield had a 8% move over a couple of days. Sorry, a 15% move over a couple of days. And that was also a telltale sign that the debt market was starting to, I wouldn't say implode, but there was caution showing in the market around the spiking 10-year yield. So the Fed has once again gone from quantitative tightening, and it looks like they're trying to push money back into the market again. And they've stabilized the 10-year yield. You can see it's actually gone up a bit today. They've tried to stabilize the 10-year yield. And that is why we have seen the likes of the stock market going up. So much so that on Friday, for example, we've had this massive green block here has been previous support, and we broke through it, which is now resistance, and we actually just sliced right through it. We didn't even actually get reject here and come down again. We went right through it on Friday. And it just shows you the amount of money that looks like it's being pumped into the stock market to stabilize the 10-year. As I said, going into the next 6 months, I think that the stock market is once again going to possibly go up. And they need to do that to stabilize the 10-year yield. And they need to make sure that the sentiment in the United States actually changes in order for them to get the votes again. So that is one aspect. The other thing is around the oil that has dropped quite significantly in the last week, where we got rejected at $125. We came all the way down to $107. We've gone back up again, and we are against resistance here. So we've gone and done a retest at 115, and it looks like we're getting rejected there. So once again, Biden has gone out and he said he's giving the US citizens, consumers, some sort of token or something regarding fuel. And apparently this week he's in talks with Saudi Arabia to increase production to actually bring down this oil price. So it's in their interest as a ruling party to bring down this inflation number. And we know the leading catalyst for inflation is the oil. So they want to bring down this oil price in the next 6 months. And also, obviously, that's going to bring down the food prices, and they can actually brag about it by saying that they've sorted out inflation. In the commodity index, we see the same thing. We saw a peak here in March based on the oil price. We came down, we formed this bullish pennant, we broke to the upside, we got rejected, and you can see we've broken down again. So it looks like commodities are definitely starting to come down, and that will actually bring some de-inflation in foodstuffs going forward. And as I say, the ruling party can really brag about it and say that they managed to sort out inflation, hoping to get some more votes. So with regards to Bitcoin, if we go onto the daily and just have a look here and just to see where we've come from over the last month. So in the last month, we were in this area from 10th of May for a month to the 10th of June. We were acting in this area of between 28,400 and 32,000. Now that area was very strong support then. And if we go back in history and just look at what happened at the same time last year between May and July, we were also acting in this area as strong support. But unfortunately, we broke through there around about the 10th of this month. And we came all the way down to last week, Saturday, down to 17.6. But we can see that we haven't gone back up to retest this previous support area, which is now acting as resistance. There's also liquidity candles here that's where there's liquidity where we need to go and capture. I do see in over a couple of weeks that we are possibly going to go retest this break to the downside, and then from there we have to see what's going to happen. Hopefully, at some stage, we will break through this resistance and carry on going back up there again. But as I say in traders' terms, the bulls climb the stairs and the bears jump out the window. So what they mean is, in an uptrend, it's a slow slog, but in a downtrend, it's a massive fall, like we've seen here, that the bears jump out the window, they come crashing down. And I think that from here going up, it's going to be a slow slog. It's not going to be a straight V-shaped recovery to the upside. We are going to have up and down, and then move up from there. I do think that we might come retest these levels again. I know that a lot of these YouTubers are calling us to go down to $16,000 and even $12,000. But I think we're right at the stage now where we were in November last year. If you can remember over the year even higher, in November last year, we were at 68,000. The news around there was that we were going to 100 and we were going to 130,000. And the market did the opposite, started dropping. Now, I think the reverse is going to happen where everybody's calling 16 and 12. And I think the reverse is going to happen here where we're going to possibly come down a bit lower, create a higher high compared to what we had last week, Saturday, and then start slogging up slowly but surely. And those buyers waiting down in this area, I think they're going to be caught short and they would have to buy at a higher price. So that is really what I'm seeing that's possibly going to play out over the next couple of weeks. The other thing is that the crypto fear and greed index, which is a measurement of what the sentiment is out there as far as the retail is concerned, you can see we're still in extreme fear of 12, and we've been in this area between 10 and 12 for, I would say, at least the last month or so. Yeah, so we would drop from 20 on the 8th of May. So it's the last sort of 6 weeks we've been right down the bottom here at 10. So the market is very fearful. And you can see that we've had a drop tonight because of those indicators indicating that we overbought, especially on the alts, and because the S&P 500 has hit a bit of resistance at the moment, and it did indicate a bit earlier that it might drop a bit, but I still think that the Fed is still going to be buying up possibly this week. And I think we're still going to have some green candles for the rest of the week. And that same applies to crypto. If we just look on the 1 hour and the last 4 hours, we have found support at this 20,671. I think this is short-lived. I think we're still going to have some green candles for the rest of this week with it. I did say that we need to go test 28,000. That is more of a long term. On the shorter term, we need to come and retest the 24,000 level. And that 24,000 comes from, not from now, it comes from way back in December 2020, where we went up and we went up in December 2020. We were in this area for a week or so, hitting this resistance 24. We went through, and that will be resistance right now as we move up. So that'll be the first sort of target that I think we'll be aiming for, is 24. So that is my view for now. Donnie, I don't know if you want to add anything there. You're muted there.
I'm unmuted now. Yes, thank you, Jason. I've seen today that broke down happened on the time that I saw some news with regards to 3 Arrow Capital defaulting on their 670 million loan.
Oh, really?
And, that happened on that moment. It was this afternoon about 3 o'clock, just before 3 o'clock.
Okay.
South African time. It was 9 something US time. It was announced that Bearish Capital defaulted on a 670 million loan, and I'll talk about and say something about that a bit later. But the catalyst for that candle.
Okay, so it's funny it happened exactly the same time as the stock market opened. Very strange. You can see there that the stock market opened also with a red candle.
Yeah, because it was on the time that the stock market opened that the news came out about that fund defaulting. I immediately thought that that was the reason for Bitcoin's price pulling back.
Yeah.
But then I've seen that the stock market opened lower as well.
Yeah. Maybe it was, who knows? Great.
Cool. Are you done for tonight, Jason?
Yeah, I'll stay for another 5 minutes and then I'll go.
Cool. Thank you, Jason. I'm just going to quickly go to the next screen here, and I will just quickly show you. It was news on CNBC News, and American time 9:45. It was announced that the prominent crypto hedge fund 3 Arrows Capital has defaulted on a loan with more than 670 million. 350 million of that was supposed to have been paid back on with USDC, and another 15,250 Bitcoin worth 323 million was supposed to be paid. And they defaulted on the loan, and they received the notice that they defaulted. When I saw that article, I have an alert on CNBC, and I've got that as an alert. And I've seen that article, just scanned it, didn't read it properly, I only read it later. But then I've gone to the markets and I saw that the market is retracing. So for me, that was automatically pulling the two together into one thing. Only later at about 12 o'clock, when I looked at the markets in total, I saw that the stock market opened about 3 o'clock. My apology, I'm now early. About 3 o'clock. And when I spoke to you earlier, no, it was closer to 4. I saw that the stock market in the US opened lower as well. Yeah, it's interesting times. And I'm going to allow you 2 minutes to give your last thoughts. I know you have to be somewhere else, Jason. And then I'll go to Marius, and then I'll come back. I've got another article that I would like us to discuss tonight. But first, over to you, Jason.
Thanks. If we can just maybe have a look at some other charts here of interest. And I'm just having a look at the DXY. And the reason why we look at the DXY, for those people that I haven't showed before, is that if we go back and look at a bit of history, and I'm going to 2 time frames. The one is from beginning of January 2017 to the end of January. If we can remember, we had a massive bull market in that year, and you can see what happened to the DXY. It did weaken over that period. And the same applies to 2020, from March 2020 to the end of 2020. We had the same scenario where the DXY weakened, and we had a massive bull run in that period also. And it's obviously a chart we want to focus on, because any indication of a weakening dollar is going to give us some clues as to what possibly could happen in the stock and crypto market. And you can see what's happened here in the last year is that we've been in this white channel in the uptrend. So this DXY has been flowing opposite to really what, for last year, for example, opposite to what was really happening in the stock and crypto market. And we actually got to an area here in March this year where we broke out of this blue pennant and we went up and we broke out of this channel. And that really happened around when Ukraine and Russia and all that was doing their thing. And we've got up into an area where there's massive resistance of 104.50. And that resistance comes way back from a long time ago, where the same resistance line was possibly support and resistance then. That was in 1999, for example, in 2002. So it's a massive resistance area. And we didn't want this DXY to break out of this area. And luckily, over the last couple of months, it has not done that. And if we go and have a look here on the daily time frame, we look at different indicators to give us clues around to what happens on charting. And one of the indicators is called the relative strength index. And if we have a look at the relative strength index, which is this top line here, we compare it from the 28th of April 2022, where we had a massive high there, to, for example, in 14th of June this past month, we can see that the RSI at the end of April was higher than now. And yet, if you ever look at price versus then in April compared to now, is totally different. So this is called bearish divergence, because the relative strength index is not showing us that we should be going up here. It's totally doing the totally opposite. It's indicating we should be going down. So this is called bearish divergence, and you can see it's starting to play out now. So what we want to see going forward now is we want to see this DXY start trending down again, which is going to be stock market and crypto market positive, and possibly stabilizing in this area, maybe go sideways or even drop lower than by 100, 101. That's what we want to see. We do not want to see the VIX spiking up like it has been doing in the last couple of months. So that is another chart that we're busy looking at there. I have spoken around the 10-year yield. There's another leading indicator for the stock market that I look at. Is called the Dow Jones Transport Index. And this is a leading indicator when it comes to stock markets. And I'll just give you one example. And that was that we hit a peak here on the 2nd of November already for the Dow Jones Transport Index. And we started trending down from there. Whereas the stock markets only started dropping at the end of November, they came back up to retest and then drop from there. What we see right now is that we are in a falling wedge where there's a 68% chance of a break to the upside. This is actually a bullish scenario. So over the next couple of weeks, we want to see this transport index start breaking out. That will give us clues that we have now got an economy that's expanding, and that will obviously give us more of a bullish indication around the markets. So that's another chart I'm looking at. And what else am I looking at? I spoke around the commodities. The final chart I just want to show you is the markets, total market cap for crypto. And I'm going to go back, right back to the March drop here. I've got this orange trend line in that we touched in March, and we touched once again in October that same year, 2020. And in the last three weeks, you can see what's happened here is that we broke below this orange trend line. We came all the way down to 762 billion. And we've come up now, and we've come up to actually retest there. We're right at the top here against this orange line and retesting. So we do want to see us breaking above this orange line And unfortunately, the next resistance is going to be right there of 1 trillion. That will be acting in a bit of resistance. I see us a bit of sideways action, and hopefully we're going to break through that 1 trillion and start moving up again. As we said last week, it's unbelievable. We were in November at 3 trillion and we dropped all the way down to 760 billion. That's been a massive drop over the last 7 months.
Absolutely. Yes, thank you, Jason. You always make the charts look so easy. And I'll always take notes. I can show you my piece of paper. I'll always take notes. There's always something on your charts that I make notes of, and afterwards I go pick up a chart that I don't have, or I go and add resistance or a support line to a chart. So thank you, Jason. We appreciate your look. And just one thing I know you're going now, but 6 months coming up, 6 months, what are the one thought that you have for the next 6 months? If you have to summarize everything that you showed us in the charts, everything that you discussed, what's your thoughts for the next 6 months? Just a general view with regards to the crypto market.
So Donnie, I think that, as I said, there will be an uptrend. It's going to be a slow slog in the beginning. There is risk in the market because of this 10-year yield, what we saw 2 weeks ago with the spiking 10-year yield. That has given us already a bit of a worry that we need to be looking out for. We need to make sure that we've got risk management in place. But I do see us possibly going up to retest, hopefully, at that $68,000 level. But you know what? Nobody's got a crystal ball. I think we really have to trade level by level. If I can use the word trade, I wouldn't say play, but trade level by level on the way up. And just try and make the most money we can over the next 6 months.
Oh, thank you, Jason. We appreciate that, and thank you for being on the call with us tonight, even though you have other commitments as well. So thank you.
Thanks, everybody. And have a good evening, everybody.
Same to you. Thank you, Jason. Have a good one. I just want to show my Bitcoin chart that I showed last week as well. And if you go look at my chart, you will see that if Marius is not looking up, then you will see the Bitcoin chart. Sorry, Marius. And I have an accumulation zone on my Bitcoin chart that's coming from the 19th of May, 2021, a whole accumulation zone that we missed in 2021. We never, ever dropped into it. And Tues Bob, when I showed you this around about the beginning of May, the 6th, 7th, 8th of May, when we started trending towards it, I truly never thought that we will go and test this accumulation zone, maybe just a week into it, one daily candle with a bit into it. But what we've done, we have gone and we actually broken through this channel, and we now see this accumulation zone that I have there as resistance. Although still in the marketplace, I've checked today again, the real price of Bitcoin still sits at a predicted price of $38,000 per Bitcoin. So the real value, the real price of Bitcoin still sits at 38,000. And if you go look at the real price for Ethereum, let me just show you that as well. And if you go look at what the real price is that the market say Ethereum and Bitcoin should be, the real price for Ethereum at the moment is still sitting at $1,700. And although Ethereum is sitting at $1,200, the real price that the market is priced in, that they tell you Ethereum should be trading for, is $1,700. So there's a significant difference between what the real price of the coins are and what their prices are currently. And therefore, I want to say I agree with Jason that I feel that we will, yes, we never go up in a straight line. As he said, the bulls will climb the stairs, but we will start making gradual stairs up towards the early $32,000 or something. The 38,000 is a bit high at this moment, but as we start climbing those stairs, we will change our mind again. But with that, Mark, let me pull you in here and say, what are your thoughts with regards to where we are for the last 6 months of the year and where we're going? What have you learned? What is it that you have on your heart to share with us tonight?
Yes, Daniel, I've been bullish on crypto for the last 5 years since I started with crypto, and I'm still bullish. And we saw these up and downs come and go. So my advice firstly to myself is, and also to the community here, is to surround yourself with people that are more clever than you. And that is what I do. That's why we have Jason and Andre and Daniel on the calls. But it is crucial to make sure that you get your information at the right places, and make sure that you also do your own due diligence. Yeah, I actually have the wrong jacket on. It must be a green jacket, because if you look on crypto bubbles, there's a lot of green bubbles, and I'm also a whale in a low cap coin, but I saw that just jumped very nicely in the last 24 hours. Yeah, and I personally, I went through all those Wall Street
cheat sheet.
That cheat sheet of hours through that emotions for the last 5 years. So I'm looking not so bad for a guy that's 21 years old, but it is just the cryptos that makes me feel older. No, I'm just joking. But in there, what I always say about crypto is that you bought an asset. So when the price goes down and you don't sell, you don't lose anything. And that is what I love about crypto.
Cool. Thank you, Marius. Yes. Allow me to remind you to go visit our YouTube channel, The Crypto School, and please go visit our YouTube channel and go and subscribe. Subscribe. Just subscribe to our YouTube channel. Make sure that you subscribe and make sure that you click the bell so that you get our alerts. And we really share a lot of good information on here. And every Tuesday morning, I go and load the Crypto Talk on there. So if you missed it, every Tuesday, we have a coaching program where we coach our students, and we load that on a weekly basis as well. Don't forget to go there. And the last thing that I want to say before I go back to the markets and go back to the articles that I want to talk about is our webpage. Go to our webpage, go and subscribe on our webpage to access the free stuff. And there on top, you see an icon saying free stuff. Once you've subscribed, you can go to that free stuff and you can go and access the free stuff on our page. But I want to go back to news, and I want to just share a little bit of news still with you. And another article that I found very, I must say, a bit amusing, but it's always when we are where we are currently. I'm on the Cointelegraph news channel, and I just found it amusing. Google users think Bitcoin is dead. And every time that Bitcoin has got a few red candles, that is always the thing coming up on Google. And the most searched thing in the last week on Google is Bitcoin is dead? Is Bitcoin dead? And they have a very nice article there where they talk about the $20,000 to $22,000 Bitcoin price and how significant that is for those people that keep on telling us that Bitcoin is dead. So it was a good article. If you go to Cointelegraph, you will be able to go read it. It's cointelegraph.com, and you will be able to go read it. And it's important for us to make sure that we get above that 200 moving average, that MA of Bitcoin, of the Bitcoin price. And that's important for all of us. And we are with you in shouting for Bitcoin to get its act together and move above the 200 moving average, because we still have 3 days in June. We have 3 days in June, and we have to get out of June with a positive so that we go into July being positive and being on the app, so that we can get some money back in July and start making money, and for the price of Bitcoin and for the alts, for that matter, to start ticking up for the second half, the second half of the year, because we only have half a year left to make money in 2022. And last year we said 2022 is going to be a brilliant crypto year, and for most it's not been a brilliant crypto year so far. Yeah, thank you, Marius, for visiting with us, or being with us tonight as the wealth coach. And last thoughts from you on tonight, and then we conclude this crypto talk.
Yes, Daniel, how many times was Bitcoin dead in the last 5 to 10 years since Bitcoin started? So it is just amazing how our big guys out there can flood the market with negative news when they want the prices down, and then with positive news when they want the prices up. And we must just learn to play the game with them. That is the crucial. Yeah, Daniel, thank you for a great evening.
Thank you, Marius. Yes, in Jason's absence, thank you, Jason, for your contribution tonight. And thank you, Marius. Our young gun, or Fib Smith, as we now call him, Andre said that we should just excuse him for tonight. He's a leader at the youth camp, and they keep him busy 24/7. So he could not make the call tonight, but he's looking forward to entertain you next week again. So, ladies and gentlemen, without further ado, we trust that you're going to have loads of green candles in the week ahead, and that we will end June in the positive on the crypto space, so that we can run into July and start making some money and take some profits off the table. This second and third quarter of 2022, we're really going to make money. We're going to take profit off the table. We're going to make sure that we maximize our profits and that we safeguard it by keeping them in our pocket and not in the market. It was fun serving you tonight. We really appreciate you being on the call. Have a good one. Blessings. Bye-bye.